Hello dosto, I am Anil Hanegave, the full-time trader, author of the book Profitable Trading Strategies with Psychology and the CEO of Trading Direction. I welcome you in this video. So many questions were there regarding what is the basic of stock market. So that is why this video is dedicated to the beginners, those who want to start their investment and swing trading in the stock market. What is stock market? Okay, and what is BSC, what is NSC, where you should invest, that we will discuss detail. Before that, just understand this India is having two stock exchanges, National Stock Exchange and Bombay Stock Exchange, and both of them is having the trillions dollar the transactions. So that why even the many fortune companies, very excellent companies like Infosys, Bajaj and the Reliance and HDFC banks, all the banks, Axis Bank and ICICI Bank, they are listed in these exchanges. Why? Suppose you want to buy a share of Reliance or the Axis Bank, can you buy and can you go to the bank and you can buy a share? No. That is why these exchanges are created. You can buy their share and you can become a owner of this Axis Bank, and whatever the profit will generate by the Axis Bank, that portion of that profit in the terms of dividends will be shared to you. We will discuss about the SEBI, that is the Security Exchange Board of India, and if you are a company owner, so how you can list your company in the Bombay Stock Exchange or the National Stock Exchange, that we are also going to discuss.
You can follow us on Facebook, LinkedIn, Twitter and the Telegram channel. The link is in the description box, and if you are a new first time to the our channel, then subscribe to the Trading Direction. I am a trainer for Paytm Money, and that is a wealth community, and I have given couple of trainings for the Paytm wealth community. So first, if you have a company of 10 crore or 100 crore, so how you can list it on the stock exchanges? See, for any legal company which is operating in India, it requires capital for scaling up their businesses. And with their own business, they cannot grow exponentially. To get the capital, they need to list on public platforms like stock exchanges. Let us say you can divide it into 90 crore and 10 crore. 90 crore is with you, that is you are the owner, and 10 crore is with the public. In that 10 crore, you can divide by 1 lakh, and one that comes 1000. That 1000 rupees is equal to 1 share. So 1 share can anyone buy for 1000 rupees. Based on that, the value of share may be different. So if you once you can list that on the exchanges, because no an individual public will not come individually to you and your company, they cannot buy. So that is why the trust is for trust building, the stock exchanges are there. The stock exchanges do the buying and selling of the shares. Now NSE is having 3.1 trillion the transactions on by May 2021, and whereas BSE is having 3.4 trillions market capitalization by September 2021. So this is NSE, and NSE is when NSE came, the principle behind bringing NSE is dematerializing the paperwork. Earlier, the lot of paperworks there, you might have share certificate, all those things. That share certificate, everything is now in the digital format and dematerialized paperwork, and now it is everything in the digital platforms. You can buy a share from your mobile also. There is process for BSE listing process and NSE listing processes. And if you are a small company, even though if you want to list in the BSE, it is possible. Just only thing is that you need to fulfill some requirements. And in the financial year to 2020, over 7,400 companies were listed in the National Stock Exchange and Bombay Stock Exchange. See, in India, this is across India. And if you want to buy a share of any particular company, you cannot track all 7,400 companies. That is why the index came, the top 50 Nifty index company, or top 100 companies, or top 200 companies, that index forms, that we call as a Nifty index. And for sensitivity index, that is the BSE, that formed in 1986. So these are two index. You can track this index for measuring the trend, whether it is going up or whether it is going down. It indicates that overall market scenario for the Indian economy or the top companies. So profit and loss, if once you listed a company on your the platforms, so if there is a more demand for share, then share price will go up. If more publics are buying, the prices will go up. The world's richest person, the Amazon's owner or the founder, Mr. Jeff Bezos, he is having most share, and that is why he became the most richest person in the world, because of he has the share, and he says that I am a happy investor. If you check in India also, Indian, the richest person, Mr. Mukesh Ambani, he is also in the stock exchange, and he is having major share of the Reliance Industries Limited, and that is why the demand is more, and they are becoming the richest. This is a way to earn the money, and yes, you need to have some kind of business model. Along with that, if you are available for the public, then public's money will make stronger. That pooling of all everyone's money will make stronger, and that is why the people who buy share also, they buy their products. Let us say I buy a share of ITC, then I like to buy ITC biscuit. You are feeling that your bank account is safe, then you can buy the Axis Bank share, because it is also safe. But there are some misbeliefs are there that we will discuss in this video, and make sure you should watch till end so that you get valuable informations. Or sometime, have you bought any shares because of your friend advice? He says stock will go up and go up. Then you are saying, once you bought, what happened? Where is the stock? It's going down. So have you bought like that? So without skills, without investment skills, without proper technical knowledge, you will fail, because people have much more misconception because they lack education. The proper education should be there. There are some misbelief we are discussing. Misbelief means wrong thought. So these are maybe wrong thought about the stock market, maybe fear factor. Breaking the stock market misbelief is very important. We will discuss one by one. First misbelief is that investment in the stock market is very risky. Do you believe? Really, do you believe? So if it is risky, why richest person are in the stock market? Why richest investors are becoming more richer? Because they have proper knowledge, and if you lack the knowledge about the stock market, you can gain it. Actually, investment in the stock market, if it risky, then if you check it, after corona news, it has given more than 60% returns. See, recently in this year I'm talking about, it has given 60% return. Now here, let us say I am taking example from 2003, because chart is so scattered, so I cannot cover from that. Let us say at that time it was having almost around 2000 index. Then go, it has risen. Okay, in 2007 there was a global financial crisis, then it has come down. So at that time you can exit. Once you enter here, you can exit here. Who told to drag that losses? That misconception is there. You don't know proper investing concept. That may be the reason, one of the reason. it is looking very risky. Yes, it is risky, but risk can be manageable. Yes, you can take a calculative risk. Here, after you can see in 2014, 13, 14, or after 13, 14 election, and the market gone. So due to PM Modi's election, so market before the announcement and then it gone up due to the election. Do you really think PM Modi bring this economy to the up? Initially, no, that's not. The market investors, they think for the 5 years. They have balance sheet for the next 5 years, 10 years. Based on that, they invest in the stock market. In the demonetization news, the market again came down, okay, but recovered fast. So recovery was fast till 2019. Okay, at the end of 2019, the market was going high and high. This is unpredictable move, that is coronavirus, and that coronavirus, during that only, that coronavirus news, the market collapsed. Okay, markets collapsed. At that time, you can exit by having keeping stop loss. There are many stories apart from this. The S Bank story, the like I have covered S Bank story in my book, Profitable Trading Strategies with Psychology. If you are not yet read that book, the description link is below, and you can click on that book and it will get delivered. Flipkart and Amazon, everywhere it is available. So after that, the economy is strong and certainty period, this market gone up. If you check from here also, you will minimum get 68% return. So that if this is safe, if you compare with the FD, it is giving more returns. Okay, FD, how much you are getting? 5%, 6%, not more than that. And that is you need to keep it for the 1 year. If you keep with the calculative, with the protective stop loss, then it is also safe. But the thing is that the phenomena you need to understand. Second misconception or the misbelief about the this financial market is that you must have financial background like finance degree or the CA degree. It's not like that. You can learn. Yeah, there are many professional courses, like we are also giving professional trainings. Then you can get it and you can learn it, and you can start with a small capital. Let us say your salary is 1 lakh rupees per month, and you must need to invest 5,000 rupees in the stock market. And I am not saying that you invest in the penny stock. You can invest in the very solid banks, which on which your account is there. So you invest in the banks, you invest in the Reliance, you invest in the big companies. Of course, I am not recommending anything. So there are two things: interest you will get, that is before announced, and the share dividend, that dividend you will get, it's not mandatory, but company profit, they will share with the companies. They will share with the shareholders. So this is a tax free. So dividends are totally tax free, and crores of rupees dividends are earned. One of our student is there, he invested in the Infosys and he got a lot of dividend. I also invested in the SBI cards, and during proper time, that also given very good return. I invested in the IRCTC. I invested in the many ITC. I invested to many UPL company, UPL Limited, that has given wonderful returns. The second misconception or the misbelief about the stock market is small investor cannot make big money in the stock market. It is totally wrong concept. You see the world's richest investor, Warren Buffett, Damani, and Radhakishan Damani, and you can see the Rakesh Jhunjhunwala, who is also called as a Warren Buffett of India. So they started from the scratch. They started beginning. Their beginning was a small money. Even they started from the trading. When they earned that money, they invested in the stock market. So they later become the investors. So you can also start small. If they are getting big profit, you may get proportionately percentage. You need to calculate percentage return. Then it will work. Third misbelief is that big companies will give small returns, and that is why you go for the penny stock. People always search for the penny stock, small companies, 5 rupees, 2 rupees, 1 rupee stock. It's not like that. See, if they are bigger companies, their stock will go higher and higher in the stock market. Which are in profit, they will go in more profit. Okay, so whereas those who are companies in loss, they will face more losses. So that is why big companies are also giving good returns, like Bajaj Finance and the HDFC Bank. They give good returns to the shareholders. That is why their shares are growing. Yes, the intelligent investor, they invest in the big companies. Though smart money, they invest in the big companies. Why? They feel safer, and where the safety is there, your risk is also less. So invest in the good company like investing legend Rakesh Jhunjhunwala and Radhakishan Damani. So they hold the share of Titan, Crisil, Tata Motors, and Rakesh Jhunjhunwala recently invested in the agriculture companies also, Tata Group Agriculture Company and Tata Rallies, and many Fortis, Escort. These shares increased. Like they see the what is the PE ratio, all we are covering in the next episode. Stock split may happen. Initial face value is of 2 rupees, and you have 1000 shares. And if it splits 1 rupees face value, you will have 2000 share. But the total value will be same. Okay, so total value will be same. So stock split may happen, and but the stockholders have same interest. What they want, their value should be same. Once you break this old belief, you need to create new belief, and that new belief is that you need not require to search a penny stock, but yes, I am a small investor, but make the good returns. Yes, small money I have. Let us say you have small money, but you will get percentage of returns, and the stock market is you can minimize the risk in the stock market by keeping protective stop losses and with the gaining skills. So you will learn a very good things, sector wise index and the good companies for investment, role of SEBI that is a regulatory body which helps to maintain the protect the interest of the investors, demat account, and the role of broker, how to start in the stock market investing, that we will learn in the next episode. This is my book. It is available in the Flipkart also. Profitable trading strategies with psychology. You can search in the search box, and it will be delivered. There are some offers are also currently festive offers. You can take that offers. Our course is there. Get 11 secret trading strategies with psychology. These are high probable trades. The frequency and repetitiveness is high. This is a blueprint for your success, and 5 hours digital learning. Charts we will share. The almost I have 1000 charts to share you, which defines the patterns. 11 tested trading strategies are there. 1 month support for you for sharing the patterns, and you, if you like this, register now. The investment value is only 4900 rupees. You will recover soon, and WhatsApp number is 7391841111, and email ID is stocktradingdirection@gmail.com. This is my LinkedIn profile. You can search trading direction. You can follow on LinkedIn, Facebook, and you can join our Telegram channel for important notifications. Thank you very much. If you like this video, support to the trading direction, hit the thumbs up button.
In each video, we will give you a quality content where the thorough knowledge about the stock market, you will get it.